Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. The pipe top formed on 9th and 12th of September were the direct triggers for the move lower that we've seen since. The actual pattern set up for the move lower, the lopsided diamond pattern, seen disappearing in the top left of the daily chart and highlighted in dark blue, is huge. I'd previously given a primary target for this in the 166 and 3/4 area, with a secondary harder to achieve target X1 in the 142.40 area. The primary target was achieved in early November, and the harder to reach secondary target X1 is in the bottom center of my daily chart. I said at the time when I indicated these targets many months ago, well, not that many months ago, but a few months ago, and I quote, "Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break lower holds, are some longer term targets." End of quote. I also continued, and again quote, "There is one other fly in the ointment, perhaps, just perhaps, this lopsided diamond pattern is becoming a big bear channel. If that was to be the case, then the first area to look at below would be the lower bear channel line of such a pattern, and that's currently 163.65, end of quote. The extension of this bear channel is highlighted in bright green on my daily chart, and the lower bear channel line has played a significant part in recent actions. Interestingly, more as resistance once it had been broken than anything else, though I believe the core of the real resistance was and is the nearby 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, which I've highlighted in purple on my daily chart. Between the extended lower bear channel and the neckline above as resistances, and for November and December of last year, the support below the 2017 high at 159.30, plus the combination of lesser Fibonacci line at 153.60, and the May and June congestion at 153.30, well, all these eroded the fall, and prices seem to halt their move lower and head somewhat sideways. I spoke about this in early December 2022, that perhaps all this drop and sideways action may be turning into a descending scallop pattern, especially after looking at the London coffee, where this seems a more reasonable idea. Well, I still hold to this idea, and the fall since the start of this year is in line with such a move. Hence, I will lay out some possibilities on the downside for such a pattern. A primary target X will be in the 128.5 zone, whilst a secondary harder to reach target, much harder to reach target X2, would be way down in the 78.5 zone, off the bottom of my daily chart. Okay, so what is in the way to stop the market reaching down to target X? Well, lots of things. Last week, the market punched down through the August 2017 high at 147.25, and then met a compact pair of supports that turned prices back up a little. By the end of that week, the subsequently higher this week, such that we are looking at the combination of the declining short-medium moving average from underneath, currently at 162.80, and a lower bear channel line, in green, from underneath. For guidance, the pair of supports were the September 2018 high at 143.35 and the 2019 high at 142.45. I'll now be very interested to see how far any price rally can extend, as we are now pushing up through the 2017 high at 159.30 as the first of many resistances. London coffee. There were in the recent past two relevant features here in relation to the start of the fall in this market back in the summertime. The first was early. It was the early August until late September type of head and shoulders pattern. The second feature was the late August to mid-October falling wedge pattern. This second pattern gave added depth to the fall and saw prices drop in mid-November, all the way to the lower time, currently 16.95, of the late December 2021 to mid-July 2022 bearish Andrews Pitchell, which I have conveniently highlighted in dark blue on my daily chart. Since then, we saw the market curl upwards, though as it has tried to do so, it has shown some increasing indecisive patterns, especially over the 2018 high at 1845 and under the congestion at 1897, until 2 weeks ago when we saw a weekly key reversal up that punched through the congestion at 1897. Thus we come to my commentary from 7 weeks ago when I put forward a new suggestion on what may be happening. You see, looking here And a little also at the New York contract, I had and have a suspicion that the action since mid-October may be a descending scallop pattern, sometimes called a backwards letter J pattern. Still early even now, but especially here in the London contract, this pattern has merit. So here are just some of the primary targets, both above, as we seem to be having a follow-through higher now, or at least starting to have one. Just in case I've included the primary target below as well. Okay, so topside, the primary target area will be in the 2095 area. This is a doable action, but it requires pushing up through a lot of resistance from the overhead middle time, currently at 1939, plus the separate congestion at 1945 to 1947, and then more at 1968 up to 2004. At the moment, these look pretty heavy resistances, but the market on Friday, and I suppose today as well, have attempted to move higher through the first of them, with limited success. Last week, I was not sure that prices would be able to do so, and the same is true this week, but I'll wait until the end of this week to develop a further view. Finally, I would like to finish by reprising my final point from 10 weeks ago, and repeated ever since, and I quote, I would like to point out two potentially impactful factors that are rapidly approaching the market from below. They are highlighted in pink, and they are the January 2021 to date uptrend, currently at 1759, and the October 2020 to date uptrend, currently at 1750. By the end of December, they will mix in with the congestion zone 1740 to 1746 that contains the August 2021 low at 1743, which may make for an interesting time, as the lower time will be down there as well. End of quote. Well, the lower time is now below both uptrends, and the uptrends are emerging above the congestion between 1740 to 1746. Thus, their combined supportive power is gradually diminishing as they each go their separate ways.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Toftbig and ADM Investor Services International Limited. And here comes the final important bit.